Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, October 19th, 2021. Well, the S&P continues to climb higher. And once again, we can basically see today, again, this is on the 4-hour chart, that the market from our opening basically just rallied all day. We did have a little pullbacks here and there, and they were tradable. The pullbacks were stronger over in the Nasdaq than they were in the S&P. The S&P was much cleaner directionally. Directionally, it was just up, up, and away. And so we did reach the 50% Fibonacci resistance, and that would be for minute wave 5, which we're looking to complete the C wave, and then in turn, this larger B wave that's now in force after I changed all of our labeling. And it still all remains the same. But today we did get our first hint of the possibility that earnings aren't going to be as earth-shattering as either people believe or people are being told or investors, et cetera. Netflix reported today. Initially, the stock ran up to 661, and then they dropped it to 614, and then they brought it back, but it's still down about $7 from the close. But now that Globex is reopening here and stocks are tradable, they're walking back in and they're buying it again. So what essentially is going to, I think, need to happen here is to it's still going to be a shock to the system. So I've added another layer for Fibonacci retracements now. And so we're going to combine the retracements with the extensions and see where we get overlap. Now, what I did end up taking out is right now, the extensions that ran for the minor C wave that we're still involved in. And actually, those also got hit today. We had some at 411, which was the 50% retracement. And then we had some at 416, 417, and it did get up there today. Got up to 17 and a half into the close today. So the market continues to really adhere to what everybody's believing right now. And then it's just up, up and away, and everything is A-okay. Now, that doesn't matter to me whatsoever. And I'll tell you why. Because I'm a technical trader. I don't really care about fundamentals. I don't really care about, I mean, I care about interest rates, but that's because of I live in the world. And so, but I don't care about them in relationship to what I think the S&P 500, what the capabilities or what the potential is for a move. In that respect, that I base it all on Elliott wave and my interpretation of the price action, and that using the tools within Elliott to help guide me into forming a wave count. So I am adhering to the 4549.55 being the all-time high still right now, as being the completion point for those long series of sequences that the market was involved in. And again, just to review, we completed a minute 5, a minor 5, an intermediate 5, a primary 5, a cycle 5, and then a super cycle third wave. Now, this, many people are in dispute with me, and they're actually counting something very different. They're basically kind of counting that we could be in a triangle pattern, which I don't necessarily see. Doesn't mean that they're wrong. There are people that are counting like this is going to go to 5,000 or 6,000. I suppose I could bring out numbers that might show that as well, but I don't necessarily agree. And in all honesty, that's what makes a market. You know, you have to have people that are willing to buy at all prices and people willing to sell to really have a functional, fair, and orderly market. So if someone's believing it could go to 46 or 4,700, well, then they're going to pay 45.15, 45.17, 45.20 because they're going to be looking to make that $80 to get to their target. That's all fine. That again, that's what makes a market. So what I've added today, so it's believing that we are still in the initial leg down of an intermediate degree ABC decline. Now, if you remember way back when this all began, I had discussed that the formation of this initial move will dictate how this larger ABC will play out. And what I meant by that is originally I start counting as if it's going to be a 5-wave decline. Well, I got 5-wave decline, which did give me confirmation that the highs are likely in and that we are heading down. Now, what I said at the time, it could be wave 1 or it could be wave A. And I counted it and left it as 1 and 2 because that is the most common. On a degree level as high as we are for this correction, I would have anticipated 5 waves down versus 3 to form wave A. But that's what we get. Now, by continuing to use Elliott, it made it clear that it's an ABC and an A wave. Now, the only other possibility, and it does not fit at this juncture, is that it is a 4th wave. And that these was still, this is actually probably still at an intermediate level, and then again at a primary level, and then again all the way up, it's still in force. So it might just be, I'd have to back it up and put intermediate wave 4 here versus to where I have it. That's the only other possibility, but I'm going to tell you why I am not doing that now. Because that would say that if this is going to be an intermediate 4, we are in an intermediate 5th wave rally in advance, and it would never start off with a 3-wave rally. So there's not a chance that I can count this as wave 1. First waves are always 5 waves. It's an impulse wave. Now this may have seemed impulse, and it was, but it was an impulse of A, B, C. So that is where I stick with this is an A, this is a B. Now, can this B go and create a new high? Absolutely. Now, let me review that part so that we all can get an understanding. This is a 3-wave A. So normally what that tells us is that we're forming what is going to be more in tune with a flat ABC. So in other words, we have this flat, right? Because it's an ABC and not a 5. And then we have the B wave, which is another ABC. And it commonly could go up to and equal, the high at 45.49. And we're getting close. We got to 45.17 today. Next resistance is 618 to where the C wave would be, where the 5th wave would be 0.618 of the 3rd wave. That comes in at 45.29. Now, where it would be equal, well, 5 would be equal to 3 is at 45.86. Now, I'm going to put back in a second here this other extensions. And that'll fill more gaps into here, but I don't want it to get too cloudy so we can't see what belongs. But as far as going up and creating a new all-time high, we're within $40, $30 of that happening. 45.50 is a new all-time high. Now, if this is going to be in a regular B wave, and that is where the B wave goes and makes a new high above the starting point of the wave A, which is 45.49, and it creates a new high above that level. this has been seen several times, even within our counts here, we've seen it. So in this case, it's because the wave is going up, it would create a new high. But it's also, if it was in a position where the correction is to the downside, it could go down and create a new low below where wave A was, and then still rally on back. And both are acceptable patterns, and they're just more complex. And you can see how far it has to play out before you can actually start to include it in your analysis. Although we have been discussing it, I needed it to break 44.72. Once it did, I changed the count. And now, just so that we're all on the same page, because I have been also discussing that I believe that the S&P and the NASDAQ are basically almost, they are exactly doing the same count. So the same count is occurring in both. But I had to wait in the NASDAQ for it to break the top of its, what I had labeled as intermediate wave 2. So I've changed that labeling as well. Now both are on the same track. So here are the common Fibonacci relationships in terms of retracements if we're going to have an irregular wave. And the first one is that wave B, which is this entire move, would come in at 1.236 times the length of the A wave. And that comes in at 46.1718. Now, we have another little overlap there, and that is where wave 5 would be 1.236 times the length of wave 3. Totally acceptable. Now remember, out of 1, 3, and 5, 3 most often is the longest and the strongest wave, but what it cannot be is the shortest. So we're just going to take a quick look. There's wave 1. It is already the shortest. So 5 can definitely get up here, and still be a 5th wave, leaving the 3rd intact. Okay, so that rule does not have any chance of being broken. So wave 5 can end up being the longest wave out of this 5-wave sequence. So now we have resistance at 45.29. We still are just at the beginning of the major tech firms and the major companies within that have a higher weighting in the S&P beginning to report their earnings. So just to give a quick review, Netflix reported today. Tesla reports tomorrow. Chipotle reports on Thursday. And then Facebook is next Monday. AMD is on the 26th. Microsoft is on the 26th. Amazon and Apple are on the 28th. So I don't think this resistance is going to contain it. In fact, I don't think any of these resistances are going to contain it. So I'm pretty much resolved, even within myself, that the market is going to move to new all-time highs. And right above that, we have resistance at 45.54. Now, so 1.236 comes into 46.17, but we're going to have that zone going from 46.15, we'll call it, to 46.25 or 22 to 25. This next zone after that is where wave 5 would be 1.382 times the length of wave 3, also totally acceptable, and that is at 46.44. Now, outside, the next common relationship for an irregular B wave, if 1.236 does not stop it, it's 1.382. So it's 138% times the length of wave A. That comes in at 46.50 or 46.60, I'm going to call it. Right above all of that, we have the 161% that wave 5 would be 161% of wave 3 at 46.80. So you can see how we start to now bunch up our Fibonacci's once again. So we have 46.17, 46.22, 46.44, 46.60, 46.80, and 46.90. Those all are in the ballpark. Now, does it want to go to 4,700? Well, that would mean we got a lot of tech companies, a lot of companies blowing the doors off of their earnings. Possible? Yes, it is possible. More is going to be based on not so much what they've made in the third quarter. That helps, but it's going to be their forward guidance. That is what makes or breaks an earnings report, in my view. It's the forward guidance. It's what everybody can now hang their hat on, because I don't think our economy and our global situation is strong enough to sit firmly on past history repeating itself moving forward. So it's that forward guidance from the CFO and the CEO that begin to show us what they've got coming up, what their expectations are, et cetera, et cetera. So it's that forward guidance that can really push the stock price more than the earnings themselves, which is why a lot of times you'll see a very violent reaction in either direction on the number itself, so whatever they're reporting on that number. And then when the guidance comes, it evens out. The market either comes back up or comes back down. One of the two. So what are we looking at? I think we still have room to the upside. I think that making a new high, I don't want to say that it's a given, because when it doesn't happen, I don't want to hear a bunch of stuff coming back at me. You said, but I believe that it carries a little bit higher probability. So if we had to weight it on a probability scale, I would give it between 60 and the 75% chance that we are going to move to new all-time highs. And they're going to scream from the rooftops and how wonderful everything looks. New highs in the Dow, new highs in the S&P, new highs in the NASDAQ. Even the Russell will catch fire eventually. But actually, I have to tell you, it's the Russell that kept the whole upside alive. The Russell for the last 6 months has been moving sideways, and it's corrected. So yes, I expect the Russell to really kind of do a blast to the high, to the upside. And that could just be capping all of this. Now, once again, maybe I will have to review the count and redo it and push this all over. In other words, all these fives need to be pushed over, except for this one. The minute and the minor, that stays. Maybe this is only an intermediate third, but so the balance gets pushed over. Not done yet, and I'm just laying it out there as a possibility. The market is going to tell us. Because right now, I cannot count this as a first wave. I cannot. It just is not. So that's why I must leave it where it is. So I'm looking for additional rally. Again, Tesla has got a good weighting here in the S&P. So that could really give us a little bit of a push and a shove. And I think Chipotle also is within the S&P 500. These are very expensive stocks. Tesla's been on a tear and a beautiful rally, pulled back a little bit today, but I would expect that as they narrow it down to what expectations might be from these earnings reports. Here we have our resistance. I've already labeled it all up. Let me add that one final Fibonacci extensions and see where we get some overlap. And what I'm going to do is I'm just laying the extensions out for wave C. Thank you. And that's going to be put right there. So we have overlap all the way up. So nothing really changes dramatically. Everything is continuing to line up. And even this C wave, it basically agrees with our inside that we have for wave 5. Here we have 618. Here we have 382, which sits right below an area that I think it should get to. So yeah, I mean, there's a possibility that we don't break to new highs and still finish this B wave, but I think it's going to come in higher. I think we could get, I bet we have 45.75 now to add. So we have 45.75, then we have 45.85, 90, and then 4,600, and then the rest of them. But you can see that wave C starts to really get extended above 45.75. Because it's getting very extended. And this would have a higher weighting, the 170.5% of that A wave at 45.85 or 45.86, 87. So actually it's coming in at 89, excuse me. So we continue to have 45, 50, 60, 70, 80, and 90. So every 10 all the way up to almost 4,600. So bear in mind, it's got a lot of resistance to get through. And that takes a lot of buying pressure. It has to be consistent. It has to be just push and push and push and push. And basically, they've now done it for several days. We started this latest portion back on October 13th, and we're now getting up to the 20th. So basically a week we've been pushing hard to the upside. And all of the moving averages remain in alignment. The 50 finally did cross on, this is on the 4-hour chart. So the 50 did cross the 200. We drop it down to the hourly chart, and you can see the 50 crossed last week. So we can, and look at the depth. I mean, it's on such a high trajectory that it's just, they're all continuing to point higher. That's the hourly chart. That's extremely a bullish chart. And again, at this point, it's going to take a shock to the market to drive it lower. Let me just take a look at the daily, and then we're going to call it a day here for the NASI. Look at that. Just all in alignment. The 200 is so far down, it's not even registering here. If I put that, let me just go back out just to see where it is. Where is that 200 on the daily? All the way down here to 41.83. But see, the 50 is now turning and rising, and the 20, and it's all there. It is all in play right now. So the 50, the 20 is above the 50, the 8, the 4. So the only thing that you might say, I mean, if they really start to get this extended, it's getting a little bit too far away from the 4 and the 8. And wow, it's getting almost 100 points away from the 20. So it's a little bit, but it's when people start to consider it to being extended. That in and of itself can start to bring in some sellers. But that's our level, 45, 49. That's where I believe the market wants to go and above. Downside, it's been on the shallow side. So I have no reason to believe that that's going to change unless there is some type of a news, and that could be an earning report or some other shock to the market. Then it'll drop fast and you'll know, and it'll break the 4. That's the daily, but we're going to be looking on a much lower level for it to start to turn lower. Break the 4, break the 8, break the 20, break the 50. I mean, that's, what is that, $25? So could this drop $25 quickly? Sure can. Look how fast they moved it up. So, and the other thing to bear in mind, when you get these types of moves, these 3 of 3 moves, you know what's happening there? When I say it's the point of recognition, and everybody goes, well, how many point of recognitions can you have? As many as it takes, because this is a point of recognition that the sellers are wrong yet again. They were here, they saw it, they bought, they had to switch all their positions. It forces that thrust in the market. And then, oh, we're going back down. They reestablish their positions, get confirmation here, get that 3 of 3 move, boom, boom. That's nothing. They drive it, and then suddenly something starts to happen and it breaks. And then we get into that 3 of 3 and everybody caves, and there are large positions that need to be rolled into a long from a short push. We're seeing it here, we're seeing it here, we're seeing it here. And I think that the higher it goes, the more caving that you have and the forcing of shorts to come. So that's the situation right now. Trade smart. It shouldn't be as hard as it looks to make money. The NASDAQ was a little bit tricky today, but not impossible. The S&P was much cleaner. And so as long as the S&P stays the cleaner market, pullbacks should be shallow. Base it on the 4, base it on the 8, down to the 20. If it starts to break below the 20, then I'm looking for a move here. Does that mean it's all over? Not necessarily. But we're trading what's in front of us. So trade your price action, trade against those, trade against your Fibonacci. When it gets up to resistance, look for it to drop back to that next level, which was resistance, now is support. So I'm going to leave it all there. And our next update will be Wednesday, the 20th.